Hello everybody, and welcome to another episode on my channel. This is another episode in the series that I've called Road to $500,000. In this series, I'll be documenting my investing journey where I've taken this portfolio that I built specifically for this channel and build that portfolio to a value of $500,000 over the next decade. I'll be sharing and documenting my investing journey with you in order to provide full transparency and hopefully give you some tips and tricks on your investing journey. So, we're going to do a quick weekly update on my portfolio, and then we'll dive right into one of my holdings, Texas Instruments, and do a brief overview of the company and its financials. So, let's do a quick weekly update. Here you can see my portfolio is organized from largest holding, Microsoft, to the smaller holdings such as VG Properties and Realty Income. Let's go to my holdings and see how the portfolio is doing. Here we can see Microsoft is up about 18%. TD is basically break even. Apple, after their great earnings this week, is up about 19%. Lowe's, I'm up about 4.8%. CP Railway up about 18.22%. Here, Texas Instruments, which we'll be talking about briefly, is up about almost 2%. American Express up about 2.5%. UNP up about 1.6%. This right here, this JP Morgan Ultra Short Income, is just cash that I have for future opportunities that I see in the market. Then here we have JP Morgan Chase up about 20%, Bank of America down about 2%, Visa up 17%, Costco up almost 17%, Brookfield Corporation and Brookfield Asset Management, I'm basically break even on these. Royal Bank up about 6.4%, T. Rowe Price down about 7.8%, NSC basically break even, Home Depot down about almost 4%, Manulife up 5%, Realty Income up about 2.3%, and VG Properties about 4.4%. Alright, so that's the overview of my portfolio. Let's go look at it in my portfolio tracking spreadsheet. So what I've done here is I've taken my portfolio and I've put it into an Excel tracking spreadsheet because I'm an accountant and I like looking at spreadsheets. They make sense to me. So I've made the spreadsheet and organized it by companies, the number of shares, the market value, my gain and loss, and here you can see my gain and loss as a percentage. So since I started this portfolio last year, I'm up about 7.3%. Now I've also added the dividend per share and the annual dividend income. And what I've done is I've taken my holdings and the dividend income and computed a percentage of the annual income as a total of my dividend income. So that gives me a picture of what holding pays me the most annually in terms of dividends. So as you can see here, TD Bank is paying me about 15% of my total dividend income for the year. And the second position is Texas Instruments. So this is going to be the company that we'll be talking about today and why I value this great dividend compounding machine greatly. So feel free to pause the video right here. You can take a screenshot or whatever you like and use this Excel spreadsheet for your own portfolio. Okay, so now without further ado, let's go and look at my portfolio on Wealthsimple. Here we can see for TFSA, it's up about $44,500, up about 10% over the past year. And if we go at it overall time, it's up about 6% there. Let's go and look at my trades that I made this week. So this week, I ended up buying some Realty Income, a bunch of Brookfield Asset Management and Brookfield Corp, some Bank of America, and Texas Instruments right here. So I'm going to go into Texas Instruments site and let's look at Texas Instruments and learn about the company first, and then we'll look at why they might make a great investment for us. So I don't know about you, but when I look at Texas Instruments, I think back to my, pre-calculus days in high school using my graphing calculators, but realistically, that's only a very small portion of their total business. So let's go and find out about Texas Instruments. We'll go to the company and let's look at what they do. It's a very easy to use website. I encourage you to go check it out. Very easy to navigate. Here we can see they have a video explaining what they actually do.
At Texas Instruments, Our passion is to create a better world by making electronics more affordable through semiconductors. As the building blocks of modern electronics, our semiconductor technologies help customers develop solutions to the world's toughest challenges, enabling smart medical devices, automated factories, more efficient appliances, and making vehicle electrification possible. Each electronic device you interact with could have tens, hundreds, or even thousands of chips inside, translating signals from the physical universe into digital data and back again, adding intelligence and new functionality to things we use every day. And all of this is possible because companies like TI have been engineering progress for decades. The vacuum tube was once at the heart of all electronics. For the first time, entertainment and information could be transmitted and received in real time. In 1954, TI engineer Gordon Teal introduced the world's first commercial silicon transistor. Electronics became personal and could be held in your hand, and things never before imagined were possible. 4 years later, in 1958, TI engineer Jack Kilby combined multiple transistors onto a single piece of semiconducting material to create the world's first integrated circuit. The chip that Jack built changed the world forever. Radar systems were made more reliable. Spacecraft were built with smaller, lighter, more dependable components. Computing power that once cost millions became more powerful, affordable, and could fit in your pocket. Through decades of progress, our innovations continue to make electronics more accessible to more people. And today, semiconductors are so affordable that they're being added to everything. Home automation makes the places we live more convenient, energy efficient, and safe. Portable medical devices monitor and transmit vital health data in real time. Cars equipped with sensing technology make driving safer than ever before. Industrial robotics make factories safer and increase productivity. Entire cities are smarter, more efficient, and more connected. Where we were once limited by technology, we are now limited only by imagination. At TI, our passion is to create a better world by making electronics more affordable through semiconductors. We think of it as engineering progress. We've been doing it for decades. We continue today, and we can't wait for tomorrow.
Alright, what a great video. So as we've seen, Texas Instruments makes analog and embedded semiconductor chips. So you might be asking yourself, what's the difference between an analog and a digital chip or embedded chip? So technically, whenever you think about a computer chip or a digital chip, you think about a computer chip essentially, but really what we don't think about is the power source chips required for that computer chips. So analog chips are the power source chips that a device needs in order to gain power to run your electronics. So they're both very important, and you need both types of chips to run an electronic circuit. So let's go and look at About TI. If we go back to their company page, let's look at them at a glance. So here we can see Texas Instruments. They make over 80,000 products. They have over 100,000 customers, and they make products to effectively manage power, accurately sense and transmit data. And they work in the industrial, automotive, personal electronics, communications equipment, and enterprise systems. So they have a lot of customers and a lot of different products. If we scroll down, we can see they're founded in 1930, so they've been around for about 90 years, and they're headquartered in Dallas. They trade under the TXN. They have 33,000 employees in the Americas, Asia Pacific, and in Europe. They have 15 manufacturing sites worldwide where they produce tens of billions of chips each year. If we scroll down, we can see that their revenue breakdown is here in terms of sales, and the revenue by market is here. So as you can see, they have 20 billion in sales in 2022, and about 15 billion of that So as they state here, 65% of that was made in these analog chips in the industrial and automotive markets. So the majority of their business comes from these two markets, the industrial and automotive. They also have some personal electronics, some communications equipments, enterprises, and other. So now that we've seen how they generate their revenue, let's go and look at why we might think about investing in this company. Let's go back to Texas Instruments, about TI. And I really like the website. Like I said, it's very easy to follow. It's very simple and straight to the point. If we scroll down, here we can see their chairman of the board, Rich Templeton, and he gives us a statement. One sentence, which is extremely powerful. The best measure to judge a company's performance over time is growth of free cash flow per share, and we believe that's what drives long-term value for our owners. I couldn't have said this any better myself or any more concise. We as investors want to get paid per our equity stake in the company. So when the growth of that free cash flow per our equity share of the company grows over time, the stock price will appreciate with that cash payment over time, and our dividend payment will also increase. So scroll down, we can see some financial highlights here. The free cash flow per share, it's grown at about 11% per year over the past 20 years. That's astounding. Their dividend growth, they have 19 consecutive years of dividend increases at 25% compound annual growth rate of the dividend. That is one of the highest I've seen, and that is amazing to hear as a dividend growth investor. Share count reduction, a 47% reduction in share count over that same 19-year period. That's basically they've taken almost half of the shares of the float of the company, bought them and canceled them. So that way you are going to have a larger equity stake in the company because there are less shares outstanding. That is what I want to see. That is very efficient capital allocation by management. They are rewarding us by growing their revenue, their free cash flow, giving us dividend cash payments, which grow over time, and reducing the share count, thereby increasing our equity ownership of our investment. They have some other nice resources here. They have a white paper. I've read this. It's very short, 6 pages. I encourage you to read it as well. And they have a couple of key videos here. If you have the time, I'd encourage you to visit this website and watch these videos. They're very brief and they provide a lot of insight as well. So now that we've looked at Texas Instruments, we've seen what they do as a business and why we might want to invest at them. Let's go and look at their financial metrics graphically on Qualtrim. Just gonna go up, pull up Texas Instruments. All right, so here we can see Texas Instruments, ticker TXN, trades on the NASDAQ at $165.82 per share. See, has market cap of almost 148 billion. See the price to earnings ratio here. We can see that the dividend yield is about a respectable 3.04%, and the payout ratio is about 53%. So they have a lot of room to continue to grow their dividend over time. Here we can see their cash balance at about 9 billion, debt at about 10 billion, net negative cash. But there's a reason for this. They've had a plan of building multiple new manufacturing sites, and this is common in the semiconductor space. They go through cycles where they need to take on a bunch of debt to build out these facilities, but once these facilities are up, they generate free cash flow and they're able to pay off that debt fast. So this is a very cyclical cycle in their nature, and I encourage you to go check out their website and you can read about their manufacturing facilities as well. So let's scroll down and let's look at the revenue growth over time. So we can see that it is cyclical, but it is slowly growing up over time at a rate of about 4.26% per year over the past 10 years. So nothing major, not a huge revenue growth per year over the past 10 years, but it is going up, which we do like to see. You can see the revenues by product, and we can see, like they stated, most of the revenue does come from those analog chips here. It's in the purple. And then they have some embedded processing revenue and other segments in here as well. We look at geographically, the revenue is spread out across different geographical regions. We have Asia, we have the US, we have the rest of the world, we have China. So I encourage you to look at this. You can pause it and see where they get their revenue from. Let's look at their EBITDA, which is just a fancy accountant's way of saying earnings before interest, tax, and depreciation. All right, so that has grown and gone up as well at a high rate of 12.45% per year over the past 10 years. So what that tells me is their EBITDA is growing at almost 3 times as much as their revenue. So their revenue isn't growing that much, but their EBITDA is, which means they have a very good control on their expenses and they're able to keep healthy margins. Let's look at their net income. About the same. It's just growing, the same rate at EBITDA, just a little bit higher at 16.78% per year over the past 10 years. Again, like I said, they're able to get these high margins and they're able to control their expenses very effectively, which is great to see. And management is doing a very good job at that. Earnings per share. This is astounding again, up 19.3% over the past 10 years. At an average rate of 19.37% per year over the past 10 years. So earnings per share have been growing up steadily, and their dividends. I bought this company as a dividend growth play. As we saw, they raised their dividend over the past 19 years at about 25% per year. Here we can see over the past 10 years, they've raised it at a slightly lower rate at 16.04% per year over the past 10 years, but that is still an astounding rate to see, and it's great to see as a dividend growth investor. Let's look at the shares outstanding. So they've been eating up shares, buying them back at almost about 2% per year over the past 10 years. That's great to see. They're reducing the share count, thereby increasing our equity stake in the company. And this is a very tax efficient way of rewarding us as shareholders. Whereas dividend payments, we can get taxed on the dividend. But when a company buys and cancels these shares, it's a tax-free way of us getting a larger portion of the earnings or future earnings of the company. So that's a quick overview of Texas Instruments. I hope you enjoyed that. I encourage you to do some more research, learn about the company, go visit their website. They have a ton of great information on there. And if you have any suggestions of my videos or anything else you'd like to see, possibly Texas Instruments related, or any other companies you'd like me to cover, that'd be great. I'd love to hear that in the comment section. Please give me a like and subscribe if you haven't already. And I hope that you have a great day. Please note, I am not a financial advisor. Investing is risky, so please do your own due diligence, and I'm not liable for any losses you may incur. Other than that, I hope you have a great day, and I hope you enjoyed my video.